Hi, Gery.
Hi, Greg.
Hello, everyone. In this video, we would like to present our newest TradingView development that is focusing on zero-DT expected move box for zero-DT traders. Gery and I will demonstrate its feature and how to use it. Okay, Gery, let's dive into it.
All right. Right now we are looking at the SPX 50-minute chart with the spread X underlying. And here we can see the expected move boxes. But before we dive into how the settings change, what can you set in the configuration, we would like to discuss what an expected move box is. So the expected move box is based on options calculation. And this is important to understand that these are static expected move boxes that are calculated at certain points of the day. So the expected move box do not change during the day, but the calculations are based on preset time intervals like pre-market, previous end of day, and the opening price. And these are the probability ranges that are priced from the options chain. So these are the probability ranges based on implied volatility and the time to expiration, which is set at the closing time of the market. So that's why it's important for zero-DT traders to calculate or at least measure the probability of the expected moves during that day. And this is a replayable function, replayable indicator. So if anyone wants to replay it, it can be. And it can also show you the historical moves and how the moves of the underlying compare to the expected move boxes that day. And what's very useful or interesting to see is this expected move box down here, which will show you the backtested data based on the underlying and based on the different expected move calculations. The calculations are similar to what we already using in the web application in the TanukiTrade website, the GEX live chart and the GEX live table, where you can select the binary expected move and also the standard deviation. These are settings that can be chosen on the configuration. And here, for example, this is very, very interesting to see on SPX that, for example, the standard deviation backtest shows you an 86% of probability inside the expected move range. So here these numbers mean the following. In the last 114 days, there were 98 days where the underlying closed inside the standard deviation. It doesn't mean that the market did not go through. It can happen that the market goes through the expected move box. The backtest data shows you how many times it was closing inside the expected move box. And it can also be seen for the binary expected move backtest. It's a more closer expiration. So the binary expected move ranges or probability ranges are usually narrower than the standard deviation. That's why you see that there is a lower probability number because it only happened 86 times out of 114 days in the past. And right now we are looking at the spread X chart, which means that it is showing you the pre-market, early pre-market, and the overnight sessions of the SPX 500. And these boxes only show you the opening and the pre-market session. So the yellow box is the pre-market session, and the purple box is for after the open and until the close. So if we zoom into it, we can see that this is the pre-market session, this part, and this part is the regular trading session of the market.
Gery, you are able to increase the font size for better visualization.
Okay.
In settings, yes. Yes, exactly. Oh, perfect. Okay. Let's look into configuration settings one by one.
Okay, cool. I will go to settings, and here you can see the settings of the indicator. The expected move box data can be selected based on EOD, which stands for end of day, pre-market, and open. If we are unselecting this one, you will see that end of day is a gray bordered box on the chart. The pre-market is yellow, and the opening range is purple. You can obviously change these colors the way you want to see it on the chart. And what we are showing you as well is the standard deviation 1 envelope. If you unclick it, you will see that this ghosted or dotted line will disappear. If you enable it again, it will appear. So this is usually the standard deviation is the widest expected move range. So for example, if you want to see what's the maximum probability right now based on the options pricing, you should use, or at least be enabled, the show standard deviation envelope, because that will give you the widest probability range for that day. So for example, if you are a 0DT trader and trading iron condors, you might want to see where the widest range is. If you don't care about standard deviation 1, just unclick it, and you will only see the standard binary expected move calculation based on the options pricing. The most important difference between the binary expected move calculation and standard deviation is that the binary expected move calculation is based on at-the-money straddles and at-the-money straddle prices, while the standard deviation calculation is based on implied volatility.
So in case of binary expected move, only the pricing, ATM pricing matters. But in case of standard deviation, only the option chain IV matters.
Yes, that's why it's usually a more narrow range for the binary expected move. You can also select the render mode, which is by default merged. And if I select separate EOD pre and open, it will show you a different layout where you can see the overlaid of both of these calculation boxes. I think the merged one is a better use for this kind of 0DT trading.
But you can show it one by one in separate mode.
Yes, I can show it one by one, like this. This is the end of day. This is the pre-market. And this one is based on the opening calculation. And obviously opening standard deviation only calculated at market open. And the pre-market is around 6:30, 6:40 at Eastern time. So if you are a 0DT trader, we would recommend these kind of settings for more clarity and easier understanding.
It's less noisy.
Yes, less noisy. Now I selected S&P futures on the chart because it's easier to see where the pre-market is, because here you can see that this line is the pre-market start. Here you can see down here that it's 6:30 Eastern time. This is the first time we calculate the expected move box based on the options data. And the pre-market session starts until this time, which is the 9:30 New York Eastern time, where the market regular trading hours starts, and the regular trading hours ends at 4 p.m. New York Eastern time. So these are the colored boxes, and outside of these colored boxes, you do not see expected move boxes, and it is not a bug, this is a feature. So don't expect expected move boxes around these areas or these areas, because it does not work. The options pricing are very different overnight. So, and for 0DT traders, this one is the most useful, most important sessions, and also for the most important expected move box. At the time of this recording, we are still in before the pre-market session. That's why for today, there is no expected move box yet, but it will automatically appear on the chart. So there is nothing you have to do to make it refresh or update it. Whenever the time comes, it will show it here. So at 6:30 New York time. And let's look at a couple of other underlyings. Let's look at NQ, because it also works for all the futures that TanukiTrade supports. So it's the same on NQ. The other one that is very popular is GC, the gold futures. It can be also used on that chart. Or
only on the 0DT.
Only on the 0DT. So whenever there is no expiration, you will not see expected move box. That's very important. This is not an adaptive expected move range. So this is not a delta curve or similar that you see on the web app. This is the static expected move box only on 0DT. So you will not see a box for 2 days. You will see it only when there is an expiration at that certain day. So for example, if we change to Intel, which is a stock, you will see it a couple of times during a week when there is expiration. Like Apple has more expirations, you will see it every other days, but not every single day. So it's important that the 0DT box is only for 0DT expirations. For example, if you want to trade XAU USD, it will also work on it based on the gold spot options pricing. So the mapping works across futures, indices, and commodities.
But the best to use it on indexes and ETFs, the larger ones.
Yes, because for example, if you want to see like random charts like Coinbase, you will see the backtests are much worse than on an index. See, only 76%. If you are looking for very volatile assets, it can range between 60 to 70 to 80% based on the standard deviation, and the binary expected move is even less. For 0DT traders, I would say SPX is the main go-to underlying with higher probability ranges inside the standard deviation and binary expected move. If you are charting only SPX, the standard CFD or indices, it will not show you the overnight or pre-market session. You have to select the SpreadX to see the overnight and see the sessions before the pre-market.
So this indicator basically helping the 0DT traders to prepare themselves for that given trading day.
Yes, this is exactly for 0DT trade intraday traders. I almost forgot to mention that this static expected move box is only appearing on lower time frames. So never expect them to appear on daily chart or 4-hour chart. It only appears below 1 hour time frame. So 1 hour is the maximum it can appear on, and 15 minutes, 30 minutes, 5 minutes, depending on your time frame, but it has to be below 1 hour time frames. And the other important thing is that although we get the options data at 6:30, depending on the speed of TradingView and the importing speed of the data, it can happen that the automatically refreshed expected move boxes only appear 5 to 10 minutes later than 6:30. So if you don't see anything exactly at 6:30, this is not a bug, this is a feature. It takes time to get the data from our servers to TradingView and import everything into TradingView indicators. So sometimes this only will happen around 6:40. So that's one thing to note here. And if you don't see the updated expected move box at 6:30, this is not an error. This is not a bug. It will automatically appear without any refreshing. You don't need to log in, log out, or refresh anything. It will happen automatically on the TradingView chart at the right time. Just one more tip on using the backtesting panel in here. If you go back to the settings, and if you would like to measure the different backtesting probability of selected calculation, you can do that by unselecting each of them and select the separate rendering mode. And if you only select end of day, it will show you that end of day calculation is 76% probability. You go next to pre-market, it's only 70%. You go to open, and it will show you 69. Usually the opening calculation is the worst or least probable in terms of being able to stay inside the range at closing time. But you can measure this separately if you want. But please, the render mode has to be used separate and not merged for this kind of separate backtest visualization.
Great. Chris will be very happy, I think.
Yes, he will be.
Chris is also always calculating these gap ups and gap downs manually from his broker data, and really tired to doing that every single day.
It will be a helpful functionality for him, for sure.
I am really happy to introduce this function for every 0DT users or future traders. Thank you, Gery, for the short summary today about this new feature. I believe this new indicator will be really useful for 0DT and future traders also. If you have any kind of questions, please feel free to ask anything in the comment section below. And Don't forget to following us on YouTube. Thank you, Gery.
Thank you, Greg.
Thank you, all of you. Bye.
Take care. Bye-bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.